Welcome to Skytech-Lens. In late summer 2025, a trade dispute erupted between the United States and Canada. Not over timber or dairy, but nickel, a metal vital for electric vehicles. The US imposed a sudden 30% tariff on Canadian nickel, aiming to protect American industry and encourage domestic production. The move shocked automakers, as Canada was the U.S. main source of high-grade nickel, essential for EV batteries. The tariff threatened to disrupt supply chains, raise costs, and strain decades of cross-border economic integration. Canadian officials saw the policy as a betrayal, especially since the U.S. had little domestic nickel production to protect. The fallout was immediate confusion, financial anxiety, and a fundamental disruption to North America's automotive ecosystem. This single act set the stage for a high-stakes economic chess match, with Canada preparing a response Washington never saw coming. America's electric vehicle ambitions rest on Canadian nickel. Nearly half of all U.S. nickel imports came from Canada in 2024, worth $3.9 billion. U.S. automakers like GM and Ford rely on Canadian Class 1 nickel for high-performance NMC batteries, the heart of modern EVs. A typical EV battery needs 38 kilograms of this nickel, and Canada's stable, nearby supply kept costs predictable. The new tariff threatened to add $250 to each battery pack, squeezing already tight profit margins. For automakers, this was a direct hit. Profit projections shrank, and the cost advantage of North American EVs evaporated. The tariff exposed a critical vulnerability. America's electric dream was built on a North American partnership, not self-sufficiency. The sudden policy shift forced Detroit to confront its dependence on Canada, with no quick alternative in sight. The electric future, it turned out, was a shared one. And now, the rules had changed. The nickel tariff's impact hit consumers fast. EV prices jumped, with models like the Ford F-150 Lightning rising by thousands. Higher prices cooled demand, just as the government was pushing for mass EV adoption. Analysts predicted 94,000 fewer EV sales for the 2026 model year, a major setback for U.S. climate goals. Automakers like GM saw profit margins shrink and cut production targets, losing billions in potential revenue. The paradox was clear. Tax credits encouraged EVs, but tariffs made them less affordable. Instead of boosting domestic industry, the tariff hurt American companies and consumers most. The U.S. aimed its economic weapon at Canada, but ended up wounding its own green transition. In a global economy, protectionism can backfire, sometimes spectacularly. Canada didn't just retaliate, it innovated. Ottawa imposed a 15% export tax on raw nickel, but also rebranded its product as green nickel, mined with clean hydropower. This shifted the conversation from price to sustainability, creating a premium product for eco-conscious buyers. Canada invested in diversifying its battery industry, securing major projects like the Stellantis LG Gigafactory and funding LFP battery production. A $5 billion Buy Canadian initiative strengthened domestic supply chains and attracted new partners in Europe and Asia. Trade deals with Germany and South Korea quickly followed, as global automakers sought reliable low-carbon nickel. Canada's message was clear. If the U.S. didn't want its nickel, the rest of the world did. The country turned defense into offense, leveraging its resources and environmental credentials. The nickel war had a new frontrunner, and it wasn't the U.S. Canada's ace was green nickel. Mined with hydropower, its carbon footprint is just 4.2 tons of CO2 per ton, far below Indonesia's 36 or China's 18. By mandating carbon tracking, Canada forced buyers to confront the environmental impact of their supply chains. For U.S. automakers, switching to dirtier nickel risked accusations of greenwashing and alienating eco-conscious consumers. Canadian nickel now carried an ESG premium, its value measured in sustainability as much as dollars. Even if the U.S. market closed, Canada's clean nickel became more desirable to Europe and Asia. Canada wasn't just selling a metal, it was selling environmental integrity. In a world racing towards sustainability, that was a powerful advantage. The nickel dispute had made Canada's green credentials a global selling point. Across the Atlantic, the EU's Carbon Border Adjustment Mechanism, CBAM, was about to reshape the nickel market. Starting in 2026, CBAM imposed a hefty carbon tax on imports, making high-emission nickel far more expensive in Europe. Canada's low-carbon nickel faced only modest penalties, while Indonesian and Chinese nickel became prohibitively costly. This created a two-tier market premium for clean nickel, discount for dirty. European automakers flocked to Canada, and South Korean battery makers boosted orders by 20%. The US tariff isolated Canada from its old partner, but CBAM integrated it into a new, greener global supply chain. Canada's green nickel was now a global standard. The US had tried to box Canada out. Europe opened the door wider. By September 2025, US automakers were reeling, and the White House signaled a possible retreat. President Trump's executive order created a pathway for tariff exemptions, nickel included, but with vague negotiable terms. Canada responded strategically, suspending its planned EV sales mandate to ease pressure on automakers and show goodwill. At the same time, Ottawa launched a $5 billion fund to shield Canadian industries, signaling it was ready for tough talks. Canada had diversified its trade and strengthened its hand. It wanted a deal, but not at any cost. The conflict shifted from trade war to high-stakes negotiation. The US needed Canadian nickel more than ever, but Canada now had options. The next move would determine the future of North American EVs. As negotiators met, the central question was, what would a deal look like? The best-case scenario, a full exemption from tariffs, would reset trade and restore supply chains, but the US wanted concessions. A likely compromise, a tariff rate quota, allowing a set volume of Canadian nickel in tariff-free, with the rest taxed. The size of the quota was the sticking point. Canada wanted it high, the US low. Another option, a reduced, permanent tariff, still leaving US automakers at a disadvantage. Whatever the outcome, Canada's new global partnerships and green reputation gave it leverage. The US needed Canada's nickel, but Canada no longer needed the US as its only customer. The balance of power had shifted. Canada was negotiating from strength. As the dust settled, the US found its tariff gamble had backfired. No new domestic nickel, higher EV prices, and a setback for climate goals. Canada, meanwhile, emerged stronger. It branded its green nickel, diversified trade, and invested in its own battery supply chain. The crisis accelerated Canada's rise as the world's premier supplier of sustainable critical minerals. The dispute exposed the fragility of supply chains and the growing importance of carbon credentials. For the US, it was a wake-up call about resource dependence in the green economy. For Canada, it was a showcase of smart economic statecraft. The nickel war of 2025 proved that in the new era, playing your cards wisely matters more than size. The future of electric cars will be cleaner, and Canada is firmly in the driver's seat. Thanks for watching. Subscribe to the channel for more updates.